Hello everyone and welcome to day 3 of our marine cargo insurance course. Today we are tackling a topic that's absolutely critical for anyone involved in international shipping. Incoterms 2020. These are the rules that define who is responsible for what and perhaps most importantly for us when the risk of loss or damage to your goods actually transfer from the seller to the buyer. Understanding Incoterms is the key to making sure your cargo is properly insured and you don't end up with unexpected costs or uninsured losses. So, what exactly are Incoterms 2020? Think of them as a universal language of international trade. They are a set of rules created by international chambers of commerce that are recognized and used globally. Their main purpose is to clearly define the responsibilities of both the buyer and the seller in a sales contract. This means they tell you exactly who is responsible for paying for transport, who handles customs paperwork, and crucially for our discussion, who is responsible for the risk of loss or damage to the goods at the different points in the journey. This is arguably the most important aspect of Incoterms for insurance purposes. Incoterms don't just tell you who pays for the shipping, they specify the exact moment and location where the risk of something going wrong with your goods transfers from the seller to you and buyer and vice versa. This point of risk transfers is absolutely critical because it directly tells you who needs to arrange and pay for the cargo insurance. If the risk of damage or the loss is on you at a certain point, then you are the one who needs to make sure that a part of the journey is insured. Now let's explore some of the most frequently used Incoterms 2020 rules. For each one, we will break down exactly what the seller is responsible for, what the buyer is responsible for, and most importantly, who bears the risk of loss or damage during the main part of the journey. And this will help us understand who should be arranging the insurance. Now let's start with EXW, which stands for X works. This term places the minimum responsibility on the seller. The seller's role here is very simple. They just need to make the goods available at their own location, like their factory or warehouse. That's it. The buyer role is to take on everything from that point. This means the buyer is responsible for loading the goods onto the truck, arranging all transportation, handling all custom paperwork for both export and import, and most importantly for us, arranging and paying for the entire insurance coverage for the main journey. Next is FOB or free on board. This is a very common Incoterm, but it's important to remember it's only for transport by sea or inland waterways. The seller's role is to get the goods to the named port and load them onto the ship. They also handle the export customs. The buyer's role begins as soon as the goods are safely on board the vessel. From that point, the risk of loss or damage transfers to the buyer. So the buyer is responsible for all cost and risk from that point, and they are the one who needs to arrange and pay for the main insurance for the sea journey. CFR or cost and freight is another Incoterm specifically for sea or inland waterway transport. This one can be a bit tricky. The seller's role is to pay for the cost of bringing the goods all the way to the named port of destination. However, here's the catch. the risk of loss or the damage actually transfers to the buyer much earlier, specifically when the goods are loaded on the board the vessel at the port of the shipment. So the buyer's role is to bear the risk from that loading point onwards. This means that even though the seller pays for the freight, the buyer is still responsible for arranging and paying for the main cargo insurance from the moment the goods are on the ship. Now we have CIF, which stands for Cost, Insurance and Freight. This is also exclusively for sea or inland waterway transport. Here the seller role is to pay for the cost of bringing the goods to the named port of destination, and they also range for minimum insurance coverage. This minimum coverage is typically under Institute Cargo Clause C, which we will discuss in more detail tomorrow. Just like CFR, the risk of loss or damage still transfers to the buyer when the goods are loaded on board the vessel at the time of shipment. So the buyer's role is to bear the risk from that loading point onwards, even though the seller provides basic insurance. If you, as the buyer, want more comprehensive protection for your goods, you might need to arrange additional insurance to upgrade the coverage. Moving on to CPT, or carriage paid to. This is an important one because it can be used for any mode of transport, that is sea, air, road or rail. The seller role is to pay for the cost of bringing the goods to a named place of destination. However, the risk of loss or damage transfers much earlier. It shifts to the buyer when the goods are delivered to the first carrier. For example, if the goods are picked up by a trucking company, then that will be then taken by them to the port. The rest transfers when they are handled over to the first truck. So the buyer's role is to bear the rest from the point onwards. This means the buyer is responsible for arranging and paying for the main cargo insurance from the moment the goods are given to the first carrier. CIP, or carriage and insurance paid to, is a very similar to CPT, and it can also be used for any mode of transport. Here the seller role is to pay for the cost of bringing the goods to a named place of destination, and they are also arranged for minimum insurance coverage. The insurance is usually under the Institute Cargo Clause A, which offers a broad set all risk coverage. The risk of loss or damage still transfers to the buyer when the goods are delivered to the first carrier. So the buyer role is to bear the risk from that point onwards. Even though the seller provides good insurance, if you as a buyer have specific needs or want to ensure the sum insured is sufficient for your specific goods, you might still consider arranging additional insurance. Moving on to DAP, which means delivered at place. In this case, the seller role is quite extensive. The seller is responsible for delivering the goods all the way to the named place of destination, and they bear all the cost and all the risk of loss or damage right up until the goods are ready for uploading at that location. The buyer's role is then to take responsibility for unloading the goods and handling any import customs. Because the seller bears the risk until delivery, the buyer is not typically responsible for arranging the main cargo insurance. The seller handles that. Finally, we have DDP, or Delivered Duty Paid. This Incoterm places the absolute maximum responsibility on the seller. The seller's role is to handle literally everything. They deliver the goods to the named place of the destination. They ensure all import customs are cleared, and they pay all for all the costs of the risk, including transport. custom duties, and any taxes. The buyer's role under DDP is minimal. You should need you just need to unload the goods because the seller is responsible for everything. They are the one who arranges and pays for the necessary insurance coverage. So, what are the practical implications of all this for your insurance? First, choosing the wrong Incoterm can be very costly. If you don't fully understand when the risk transfers, you might mistakenly believe your goods are insured and they are actually not, or vice versa. This can leave you or your trading partner uninsured or underinsured for a critical part of the journey, leading to significant financial losses if something goes wrong. Second, and this is a key takeaway, you must always align your insurance policy with the chosen Incoterm. This means that the Incoterm says the risk transfers to you at the loading point, your insurance should start from that point. This ensures there are no gaps in coverage and that the party who is responsible for the risk is always properly protected. So that brings us to the end of our discussion on Incoterms and their impact on marine cargo insurance. It's a complex but vital area. Now I'd love to hear your thoughts based on what we have covered today and considering the risk transfer points, which Incoterm do you believe offers the most protection for you as a buyer when it comes to insurance responsibility? And why do you think that? Please share your insights in the comments below. Thank you so much.